Good afternoon, everyone. Welcome to Wednesday, December 3rd, 2025 Trading Trends Stock Edition. Got a good one for you today. Some really impressive moves in the market. Things looking good. Also, programming note, starting next week, Wednesday, I will start doing a bit of halftime report. I'll start doing my only show of the day during the market day. So I'll be doing that at 1 o'clock Wednesdays, Monday, Friday, the usual 4:15 ETFs, and then Wednesday, 1 o'clock live. Recapping the morning, and they'll still have a 5-day look back. All right, without further ado, let's get into what happened today. Really impressive move from the small caps. It is stock edition, but I do want to highlight the overall macro. There's a job number this morning, not too great. So the market kind of winking and saying, oh, Fed, you're definitely even cutting next week. Pretty much priced in, let's be honest, 25 bips coming out next week. I think it's going to put a lid on this market rally that we've had, but a little bit more to go from here. So again, like I said, stock edition, American Eagle, literally on the Sydney Sweeney bump up a big day. We'll take a look at the earnings from what the ads did to shoppers on Semi. A big day in tech and Microchip, all big double-digit percentage runs by these companies. And then Pure Storage and GitLab, absolutely really big collapses today in those two charts. So we'll take a look. AI not helping everyone in GitLab's case. So you'll see the charts in a minute. So let us get to the dashboard panel real fast and get to the big moves. Boom, boom. All right. So Tesla, a big move here, up 4% today. A great day for Tesla. NVIDIA not participating, down 1%, still at 180 only. I know things will really be thrust to the upside once NVIDIA gets back to that 190 level. Still not impressed with the overall risk-on environment until NVIDIA gets over 190. That to me will cement the momentum trade, crypto, yen carry, yields. Honestly, the metals trade, a lot of it for me will be centered knowing once NVIDIA gets that risk level. Microsoft down a big 2.5%. They had a messy day saying that they cut sales quotas numbers this morning on lesser than expected AI revenue, and then they pulled it back. The stock didn't truly recover, closing near the lows of the day. Google back to its winning ways, up 1.2%. Small caps I mentioned to at the beginning, up nearly 2%. Small caps leading. The price cut is absolutely being sniffed out. IWM within 1% away of new 52-week highs, as is the S&P and many of your majors. So it's where you want to be. And VXX is printing new all-time lows, by the way. Market is taking literally well, not literally because the market's not breathing, but it's taking a breath, a sigh of relief here as it's getting ready to, literally you're watching it go higher. AMD up 1%. Already talked about Google. Meta down 1%. Marvell, we'll take a look at the chart, up 8%, a massive day. Palantir up 3%, and the MicroStrategy up 4%. Bitcoin looking a little bit better. Micron down 2%. Can't believe that. You can almost never count when that stock is down 2 days in a row. Also want to comment, very light volume today. SPY, 56 million shares. We typically do about 85 million. So a little bit more than a half day, almost feeling like a Thanksgiving hangover. And that's exactly what you want to see. You've seen these creeps up higher in the market with VXX printing all-time lows. The fear is, not, I'm not going to say literally again, but the fear is not there in the market for a backdrop of a sell-off down to, 6,400 or the kind of environment that we had before. But anyway, one comment on the volume. They sold off. Here was the jobs number, I believe right around here. It took us from 683 all the way down to about 680. And then nice recovery. We got above that volume weighted average price. That's this orange line here where my cursor is at 10 a.m. And honestly, they just kept buying all day. It took a major leap up at noon here when we went to 683. And then boom, the peak came at 3 p.m. Eastern, 685, truly $5 away from new all-time highs. And then they sold it off a little bit into the close, still holding VWAP, which is 683. We closed at nearly 684. As I zoom out, it's exactly what we've been saying. Looking at the charts, I have a peak going on a cycle count to truly Tuesday, Wednesday. The Fed, I believe, is Wednesday. So it depends what Powell says in that press and everything. But I think that'll put a lid on this market. I have 695 for my target, which is 12% or $12. We're just about 2% away for about 7 days from today. Again, the prior high struck on October 29th at nearly 690. I think we eclipsed that. I think it spoofs a couple of people in that we think we're all going to get to 700 or 7,000 equivalent in the S&P. It may do in the futures, but I think that'll put truly ring a bell right there, maybe 701, and then we start to correct a little bit, probably down to the area of that former breakout, maybe a little bit lower, right around 6,800 in the S&P. That's what it seems like to me. And like I said, I think it's going to reach all the crescendo early to mid next week, and today looking very constructive. Let's get under the hood. Let's look at these crazy stock movers and see. Oh yeah, I bought Pfizer today. I bought some Pfizer February calls. Let me pull that up real fast. Hang on. I bought the Pfizer December. I sold the December 25s. I'm sorry. Well, I can't speak today. I bought the February 27 calls and sold the D's 27 calls. Got some exposure to that rip-roaring healthcare trade. Not exactly a biotech, as Pfizer does have actual profits and a pipeline. But I did enter that for the healthcare exposure, and also bought ARC right towards the end of the day. Stock looking really strong. I bought the Jan 85 calls. Stock closed about 81 today, so putting some risk on for what I anticipate is a big rally higher in the next week, about 2% in the index and more, more beta sensitive areas. So let us get to what we were just speaking about. Where did that doc go? Our first doc of the day. Okay, so no joke. Here we go. I already talked about SPY. It is American Eagle Outfitters. Yes, this is the Sydney Sweeney candle. They reported earnings. That's what the E is for. And truly, the company is overbought. I think similar when they announced their prior earnings. I guess she was in the ads then, but the stock has exactly the base that you want to see. New 52-week high, 84 RSI. Stock looks absolutely great. A little bit extended, obviously. That's almost 2x from 200 moving average down there at 1330. Don't want to mess with it up here. But, pullbacks. Retail, there's some real spaces that have really been strong. Kohl's, TJ Maxx, I said Dollar General making, some decent in-ways. Even Home Depot's had a bounce off the lows. So retail looking good here. The market, like I said, all across the board sniffing out a rate cut. Of course, it goes right in your pocket. Yeah, this for entry, I mean, this is just crazy. Sometimes the charts go parabolic and we have to discuss them. But I mean, I wouldn't chase this above $20 or so, just technical analysis. I'd go to the area of the former breakout, and that's 20 even. Again, that's $4 extended here. A massive 15% day. I hope Sydney Sweeney has some stock in that. Congratulations. Next it was a big semiconductor day. Many areas were really rip-roaring. It wasn't NVIDIA and some of the common ones that we talk about. On semiconductor, just assume a lot of these are earnings. This is the off-calendar earnings companies that do this. So you get some retail, you get some European semis, you get some weird media companies, et cetera, et cetera. On semi, up 11%. This is an interesting chart. As you can see, this just spent, look at this purgatory it's been in since July, sliding 200 moving average, and now trying to get right back to where its prior earnings drop happened. It lost 16% that day. Today, a nice 11%. No earnings today. I guess they just had some kind of announcement, AI, yada. But this has been green every day since November 21st, one red day since November 19th. That is extraordinary. The buyers truly stuck in at $45, and they have sent it all the way to $57 here. Let's see if there's a trade. I mean, this went really parabolic. This has had a beautiful run off the bottom. I don't like chasing this beyond $54, $55. So good to see it went blasting through this resistance that was somewhat formidable right here at $55. Went all the way back since summer, but it blasted through that here. Next area, if it has it, $64, but I don't think that's in the short term. Good to see RSI, and again, closing near the highs of the day. Might go, like I said, $59, something like that, but I'm not personally going to chase it here. A nice, beautiful carving out of a 200-day moving average too. Still, now it's going up by about 3 cents a day. That's a beautiful, thing that algos can look for right there. If you add 3-month highs with a 200-day moving average that starts to base within 1% of its value, that's a great, it might be a little bit painful, but that is truly what you're going to see in a recovery. So again, that sum, the 200-day moving average is $48. And this thing's at 57 here. So probably goes a little bit higher short term and then goes lower. But longer term, I want to chase this story. On semiconductor, it looks like you can go back to the prior highs, $71 over time. So, but first things first, it had a beautiful run from 45 to 57 in just a handful of weeks. All right, and then one last big move of the day. All these companies were up to 10 to 15% and on massive volume on a light day. Relatively. Microchip technology up 12% on Monster Day. Again, this one has had a bit of a fall. Peaked in July at $77. Stock looked absolutely great until the earnings report sent this company down just about 2% November 6th, but it hasn't been above the 200-day until today. So now what with Microchip, it's had a beautiful recovery, from $50 just in the past 2 weeks, similar to On Semi. I don't want to chase this one either. We take high probability trades as much as humanly possible because it's hard to win out there consistently. I wouldn't want to chase this one beyond $61, to be honest. The 200-day is at 60. I do think, like I said, the curvature is here. It's above 50 RSI. It's happened for a day. This thing hasn't been above, crazy, hasn't been above 57 RSI for more than a day since back in July. So definitely a sentiment shift. Next stop could be $75, but again, not in the short term, maybe in a couple of weeks. But yeah, as I said, probably safe to, I don't know how much you get paid, but you could probably easily sell the 55 puts on this. So with some of these, that's too high to the upside. You don't want to buy them. You can always sell the downside, especially if you see VIX printing all-time lows, as it is, volatility coming in. Okay, let's take a look at the next one, Gitlab. Oops, I'm sorry. So these are the losers of the day. Let's go to the first one, Pure Storage down 27%. Wow. Obviously, this is no Sydney Sweeney deal. Ugly day, down a quarter of the company in one day. I'm just assuming they're giving people cancer or something. But this is a technology hardware company, data storage. They are a $31 billion market cap now. Earnings are not too good. I'm guessing that maybe have been what the issue was. Bad price to book, bad free cash flow. Other than that, the stock has been really on a wonderful tear all the way till November, hitting par or $100. And then it's had hard times here. This looks ugly. This looks like it's going to be in the penalty box. They could send it south of the 200-day moving average. I think this has to correct more so in time than price, meaning just literally it's going to be in the penalty box. It might send it to 63, and then look at all this area, this traffic that it had going up until summer. So worst case, I think it could send to $61, and then I think it would be a buy here. Don't forget this, like I said, this company was $100 on November 4th. Not really sure what happened today. Let's take a look besides the, the cancer sharing. Earnings, and that is about it. Blah, 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 blah. Don't really care much more than that. Looking at the charts, I would see what happens. Earnings have been a good reward for them as well. It's a big mover on earnings. In August, it moved up a third of the value of the company. And then obviously today, a quarter give back. Before that, not as much of a move. Honestly, May, they were flat. And then again, a 52-week low, coinciding with the SPY 52-week low back in April at $35 essentially for this company. So crazy ride. It was oversold then too. I say wait 2 weeks, just truly sit it out. You might see a 6-0 handled on this. And I think that's going to be an invitation to buy. All right. Gitlab got smoked today, down 13%. Also earnings. There's been too much AI adoption, they're saying, and it's hurting their bottom line from, traditional, learning and such there in the software company. So they develop software development lifecycle in the U.S., Europe, and the Asia Pacific. It's a $7 billion market cap. We're only on about $1 billion revenue. Technicals here. Oops, screen is freezing here. Volume trend drying up. So this stock is very ugly. This peaked, and this is 52-week manner. This just got KO'd. I'm thinking of that Sparta right here on March 10th. It got kicked off under the 200 moving average, and truly nothing doing since. It had this little meerkat here on November 3rd for a second above the 200-day. It closed above it, and then nothing since today. 52-week low. They didn't get it truly oversold, and they did step in at $36. They closed it at $37.90. Which was VWAP on the day. I'm bullish on markets, and I think every dog has its day. I haven't said every squirrel gets a nut in a while, but I think this has a dead cat bounce to about $43 to $44. I would say just right prior to today's disaster over the next 2-ish weeks. But obviously, it'll frustrate when you have a chart like this with a very heavy slinky of death, 200-day moving average like this. It's going to frustrate. But I do like the hammer from today. That at least they stuck in at 36, and I think they've already been hurting it for a while. I didn't see that oversold measure. there's probably better plays out there with the SPY basically at all-time highs and then getting dead cat balances. But so I don't want to sell puts on this. But yeah, I think the stock goes to 43 over the next 2-3 weeks. All right, and then Trade Desk, the last one that got absolutely not smoked. This was only down 3 1/3%. We highlighted this a while back, and this is an ugly, ugly chart. And they are not loving Trade Desk. This is a what's the market cap on this media company now? $20 billion tech company, media company on $3 billion revenue. Earnings are, they reported on November the 6th. That was the last thing here, but this looks ugly. Look at that. Tell me technicals don't mean anything. This got to the 200-day, which was sliding, and then absolutely fell out of bed after earnings on August, down 39%. Goodness gracious. And then this last earnings also down, but not nearly as much, down 4%, and just looks like it's doing a staircase of death. 52-week lows about 2 weeks ago, although it looks pretty close today. I don't like this one. Similar to what we talked about for the chart preceding, they may want to rally. This one's very small to about $40, but they'll use it as an opportunity to sell it. I think this wants to go to about $37. I think it does over the next 2 weeks. This looks ugly. This hasn't even sniffed 40 RSI. No one cares about Trade Desk. Okay, top 3 gainers of the past 5 days. These are all pretty much the same flavor of ice cream. Applied Digital, #1 best stock in all the land with the parameters of at least $20, share price and at least 10 million shares average traded in the past month. This is up 25% in the last 5 days, or an average of, last I checked, 5% per day, which is exactly what I did today. So this thing is just up, up, and up. And look at this candle here on November 21st at a clean bottom at 19, which was also the highs going back to mid-September when it first entered that overbought period, which it stayed in until late October, peaking on, actually mid-October, peaking on October 16th at $40, and then a 50% haircut. My goodness. And then boom, all the way back. It almost looks like crypto. So this is Applied Digital. A little bit of fundamental, since that so much matters. $7 billion company value and only on $175 million. They design, develop, and or operate digital infrastructure solutions to high-performance computing and AI industries in North America. It looks like it has a little bit more bullishness, but I don't think it goes past absolutely $33. I don't think, and we're going to see this when we look at the computing stocks and some of these, crazier movers, not oversold at all this year. Rising 200-day, nothing wrong with it technically, but you're seeing lower highs is just, Helen Keller could see that. Probably not, but that's what I'm seeing here. So I don't think this next rally will take it above 33 unless I check this line right here is 33, and this is 40. So they weren't ready for 40 back in October. I don't think they're going to be ready for north of 34 in the next week, but I do think it goes higher. Beautiful candle today. This doesn't look like it's done yet. This has some energy. Again, it's doing what it averages for the past week. If these candles get a lot smaller, uglier, but it looks like it wants to go heading higher. Again, this is a crazy volatile stock, but this one looks like it has $32 in its future in the next week. Applied Digital, the best stock of all the land in the past 5 days. Let's look at #2, and I can't believe I'm saying it. Intel, #2 to a 52-week high today. Wow, the White House's Intel. This story is still there. I know a lot of people, I was reading some writing about, this. They thought it was done here back at the end of October, right around Halloween, when it was getting to 42. And this thing's had a monster just week. That's why we're talking about it. It's done 22%. And this is not a billion-dollar company. They are a $200 billion company on $50 billion in revenue. So everyone knows them. They'll probably have a little sticker on your laptop. So 52-week high for that company, not oversold at once all year. A beautiful chart multiple times. Not going to spend the time to go through it all, but once you had a breakaway above their 200 moving average that was starting to rise in mid-August, that was one big clear signal. That price level there was 22, essentially, I'm rounding, and then a clean breakaway. This gap up, although you would have chased it in mid-September. So really, I'm saying the breakout above $26 and truly off to the races. No reason to really exit since then. Right here, I don't want to chase it. To me, $42 to $43 is full value. So a great week. This is doing far less than the average, right? If you're seeing that momentum slow down, Applied Digital didn't have it. It still did 5% today. You look at Intel up 60 bips today, but it's averaging 4 and change over the past week. I think it's plateauing short term. I think this, visits about $39 or so. Probably maybe with the market all-time high backdrops, probably closer to the area of the former high. So maybe just 41, but the charts, to me suggest closer to $39. But I'm not truly going to chase it here. But if you're in these gains, White House, I guess, and others, congratulations, up 22% in the past 5 days to a new 52-week high today. And then more tech, this time Marvell, up 20%. Okay, different flavor. This is not 52-week highs, not even close. This still has a sliding lower 200 moving average, although it is starting to base. Good old Marvell peaked in January at $127. And here you are. Here you see we are at call it $100, a monster day, up 8%. It's averaging 4%. Today it's still going. This looks like it wants to get to this next area about 112, but you got to see what it's done recently. Again, Marvell Semiconductor Company, $80 billion on about $8 billion revenue. I think it hit its ceiling here near term. I have this 100 as a bit of a wall here. It may escape it for a day or two. I just personally, again, would not chase it. I don't want to sell the outright calls as well, or either. But something tells me this wants to get to about $88. I think the backdrop of the market ultimately will lift it higher. Maybe not as where it deserves or should go, just based on the numbers visualization here down to 88. But I definitely don't want to chase this for the next 2 weeks. So that's Marvell, a monster week, up 4% a day. Today up 8. But I don't want to chase it here. Top 3 losers of the past 5 days. Nutanix, number 1 loser, very ugly, not good feeling with markets within 1% of all-time highs, and you're printing 52-week lows, which is what Nutanix did today. I remember this company from back in the day. Let me put up a long-term chart here. Yeah, this company peaked in May of 2025 at $83. This used to be back in the COVID days. This was an $11 stock. It had a lot of volume then, and now there you go. So let's go back to a 1-year view here, and why we're looking at it because of 52-week highs, or 52-week lows rather. This is a $12 billion company on $3 billion. They're an enterprise cloud platform throughout the world. It's hard to say dead cat. The chart tells me dead cat bounce, but the price is telling me 52-week low and an oversold RSI of 20, which means nobody wants this hunk of junk. And no one's wanted it even since $61 price target before, or about $61 closing price since before this horrible earnings report, where 18% of the company was shed the day before Thanksgiving. So, yeah, not a fan. It probably heads to 55 painfully over the next 2-3 weeks. By in no way buying calls or even selling puts, because that is not a good-looking, healthy company right here. Okay, that was a big mover down in the stock market, and by a lot. They were down 20%. Today was up 2%, so it could be slowing. The sellers are getting capitulated there, and the buyers stepping up. But again, not a name you want to chase. The reason why we're talking about in absolute terms is down 20% is Nutanix. Number 2 is XPEV. I had to really search for losers here. The third one's down single digits. But XPEV down 13% over the past 5 days. Almost 3% a day. Today, losing 4%. This one's had a change of heart very quickly. It reminds me of crypto in the last month. November 11th, 52-week highs, $28. Superstar of China. This is the Tesla of China. They're making bots as well. And then life comes at you fast. It went under the 200-day, November 20th. And now this thing is not looking, so great. We're at 4-month lows here. The 200-day is rising. Now what? I think EEM is perking up. This could be a way to play it if you're okay with single stock risk. This looks like a little bit extended to the downside. I don't love how weak it is looking here, but I want to give this dog a bone. This has had, again, look at the entire chart with the low coming in January at $11. Peak November, $28. No closes all year until the last 2 weeks ago. And now trying to carve this out. I think it's a big oopsie. You could be a lazy trader and wait till it gets above a 50 RSI, which is going to correspond with 22 even. That's going to be basically the worst is over, and you have very little risk to the downside. Or you can give a dog a bone and get in a little bit sooner. I do think this does get to $22 though in the next 2 weeks. Don't want to sell the puts though either. I'm already long EEM, but the chart does look decent. Also, you had they really flocked in. Tesla was up 4% today. XPEV down 4%. Dollar had a big slide, didn't help FXI EEM. This does look strong though. The chart, if you really do need Asia exposure, there's worse places that you can be in. XPEV, the second worst stock anywhere. And then number 3, this was on my list, but I got into Cypher instead, and that's not coming back so much. Yeah, a little bit. But Iren up 7% today, but we're talking about it because it's had the third worst stock day, down 8%, and that's how bad it gets. That's how you know stocks market is near all-time highs, because the third worst stock was down 8%. That's nothing. It was up 7% today. You did have a bit of a money flow sell yesterday. It was really heavy volume, one of the highest in the year for Iren, over 80 million shares. It was down 15%. They said they were issuing debt. Essentially, Iren is a $12 billion company now in the data center business out of in Australia and Canada. It's been a very, very massive momentum trade, peaking in early November at $77. Look at the 200-day, for goodness sakes. It's at 24. It has not been above 50 RSI since aforementioned November. I don't like it here. I think it's in a tough spot. I don't like the overhead of $50. I just don't think it has what it takes. Unfortunately, I wanted to buy it. I'm in Cypher, so I'm looking at this as well. This does not seem to be in short-term favor. I just think for 2 weeks, it's going to be still sub 50. I would love for it to curve above, but technically the trend is still longer term okay, with the 200-day rising at 24, but look at all the short-term moving averages. I have the 20 and the 50 still going downward, and that coincides right there with 50 even. So great looking candle. I don't think 40 will break. I just think it might be range bound between 40 and 50 for the next 2 weeks. So you can sell stranglers who get paid because it's volatile, but also you be careful getting steamrolled to pick up pennies. Okay, so we're talking about that because what happened? The third worst stock, Iren. Top 3 trades of the past 5 days: long APLD, long Intel, long Marvell. The 3 best trades in all the market. And now let's do this, since we only do our stock edition once a week. Let's do top 3 trades of the past 52 weeks. And I assure you, they are not in favor right now. And the percentages year over year have dropped quite a bit. And I'm in one of them, and they have not recovered. Number one stock essentially of 2025. This is from December 3rd, of course, of 2024 through today. It is D-Wave Quantum, or QBTS. It has outscored our Rigetti just nearly by 13%. So ask me tomorrow and it could change. But QBTS is your number 1 stock of the year. If you remember, this hit lows back here at $4 earlier to start the year, and this peaked. And do I mean peaked? October 15th at $47 during a crazy overbought period for about 2 months, and they kicked it off out of the 50 RSI land on Halloween, and it has not recovered since. Near-term lows here at 18.5 just 2 weeks ago, and now a great looking candle up 12% today. D-Wave with a very strong move. The problem is I think it has a little bit more to do. I think the momentum trade is, you saw it with ARC. I think they're starting to wake up, of course, but this has very significant, I would say, near-term resistance here at $27. Nice looking candle, and here's the cursor for $27. Look at how clean that line is. Very meaningful level. $27 is still $2 away from here. Another 8%. Let's see how this one trades tomorrow. I think it'll be very telling. It hasn't had big candles in a while. It's on the doorstep of 50 RSI, which it hasn't done since it kicked off the month of November. We'll see how it does short term. Very important level, but you got to understand this has ran from 20 to 25. That is a monster move. It is your stock of the year, though. So never underestimate the heart of a champion, I think is what Red Auerbach said. We'll see. So that is QBTS. You could buy some, February, Marches, 35 calls, something like that. If you think the trade's going to come back, 200 days still rising, not oversold at all year. Stock of the year. I'm in this. Number 2 is Rigetti. Basically, same return, up 723%. Look at that. Talk about different flavors of ice cream. Peaked October 14th, 2 days prior, $58. Still more than close to a 50% haircut. 200-day moving average still here, rising at 18.25. Almost the same thing. I'm in the next year calls, early in the January or February Rigetti calls. This one, again, to me, significant resistance right there at 29. So I think it has a little bit more to go if you want to chase it short term. Again, it's at 26 today, up 9% Rigetti. These are finally starting to wake up again. This has moved from 23.5 to essentially 26 here. I think it gets you to about 29, and then I think it has to stop for a while. I think it'll consolidate there, and I bet you 29 coincides with that 50 RSI, and it still has that medium week term trend. But again, this is your number 2 stock of the year, and the number 3 up a paltry 377% for third place. OKLO, another quantum computing stock. So all these flavor of 2025 and flavor of October, but right now being in the doghouse, this chart looks, I'm not going to go into the history because it's very similar. This looks like to me near term that it's not going to get above 105. So a little bit more to go, yes. And then right there, that's very likely where it's going to stop, very meaningful level. So scary part about this is obviously it's a big momentum trade, and these look like clear peaks in mid-October, a la Bitcoin, very similar to that. So we'll see if the market comes back to this, but is not in favor here. Again, it will be sub 50 RSI since Halloween. Spooky, scary. That is it for now. We will speak with y'all on Friday for ETF and a wrap-up for this crazy week. Maybe we'll be all-time highs by then. Peace.